I like to remind clients, Rick, that history is a way of repeating itself. So let's go back to January. In January of this year, oil prices are trading around $64 a barrel. That correlates to lower overall inflation numbers. Stock markets really like that. Consumers like that. When you and I go to the local Quick Trip or racetrack to fill up our gas tanks, right? It's not too painful, right? Then you fast forward. It's May of this year, Rick, right? We have a war with Iran, right? Oil prices crank up to over $100 a barrel. Now inflation has gone from 2.4% to 3.4%. All of a sudden, consumers not so excited to go fill up their gas tanks, right? Consumers a little hesitant to going to the grocery store because energy and oil prices bleed into so many things. And now the stock market's a little more hesitant, nervous. Well, as we sit here today, Rick, guess what? Oil prices trading back around $70 a barrel. Why is that important? Here we go. Ready? Oil prices, when they're lower, correlate to lower overall consumer inflation, which translates to historically greater stock market returns. First off, like I feel like you had to be living in Siberia to not know that SpaceX went public last month, right?
Right.
That said, as you mentioned, some other fantastic companies, Rick, have also filed to go public. OpenAI and Anthropic, just to name a few. And why is that so important? Look, what that tells us, it's a clue, Rick, that the markets are doing better. The economy is doing better. We're on more solid footing, right? The IPO market, Rick, has been dormant for the past 5 years. So this is wonderful news. That said, as you mentioned, like investors need to be careful, right? Allow me to explain. Historically, Rick, since 1990, I'm kind of a data geek, right? Since 1990, a little more than half, about 52% of all companies that have gone public have underperformed the S&P 500, the broader markets, by a median of just 0.5% after 1 month. Not too bad. 3 months out, about 60% of all companies that have filed to go public, trading on the exchange, are now underperforming the S&P 500 by 5%. And Rick, the trend continues. 1 year and 2 years out, approximately 70% of all companies that have gone public are underperforming the S&P 500 by 25 and 35%, 20 and 35% respectively. So I'm not advocating, Rick, that all IPOs are poor investments. In fact, some have been wonderful long-term investments. Here's my point, right? Be selective. Have a strategy, Rick, before you go into the IPO market. Know when you're going to take profits, and just as important, know when you're going to cut your losses. Because, like I said, as history is our guide, most IPOs, unfortunately, underperform the broader markets.